Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking about a concept that I previously spoke about in one of my videos. Nonetheless, in this particular one we're going to be focusing on it, which is known as trapped volume. Okay, we're going to be looking at different markets from a perspective of trapped volume, meaning where are short and long traders being caught, what are different market participants potentially looking to do, and how we can benefit from that. Okay, it is a concept that is very much related to trading psychology. So if you're struggling with a little bit of that, I think this is gonna help you a lot. I've prepared a presentation just like I've done in previous uploads. So if you're interested in that, we're going to be going over some information. I do believe it is going to be very, very helpful for those of you who actually stick through the entire thing and try to apply the ideas and concepts that I'm going to be showing you here today. Nonetheless, this is not going to change your trading. This is not going to make you profitable. This is just one more idea that you can start applying as you watch and trade these markets. Okay, so with all that being said, guys, we're gonna be jumping right into the presentation. I've prepared some information and charts, and we're gonna be discussing a little bit of trading psychology as well. So if this sounds like something you want to learn today, make sure you stick to the entire video because I'm going to be trying my best to provide you with valuable information. With all that being said, let's get started with today's lesson. All right, everybody. So welcome to this brief presentation that I'm going to be hosting on the topic of trapped volume, understanding market participants and market psychology. Okay, we're going to be going through a little bit of information. As I said before, this is not going to be anything groundbreaking. Nonetheless, probably going to be helpful to you as a trader. So let's get started over here. Once again, we're going to be focusing on trap volume, but there are certain things over here that you need to understand first. Okay, so when you're looking at any given market, you have to think about the different participants there may be. Okay, and I'm talking about retailers for the most part, because this is the information that we know is accurate. Okay, so we have four different groups for the most part, right? We have traders who are already long, who are in a buy position, right? We have traders who are already short, sell positions. We have traders who are looking to go short, right? They may be looking at a market and they may be waiting for a specific price point to go short, right? As an example over here. And we have traders at the same time who are potentially looking to go long, right? Just because you want to go short over here, it doesn't mean that somebody else isn't looking for a buy at the same price point as you, okay? More than likely, there's essentially people to go long and short everywhere in a market. But for now, just understand this information, okay? These are the four participants that we're going to be focusing on that are present in any given market. Once again, let's go through them rather quickly. People who are in buy position, sell positions, people who are looking to get involved in shorting the market, selling, people who are looking to get involved in longing the market, buying a specific market. Great. Let's move on over here, right? And now you may be asking yourself, why is that information even relevant? Well, this is where we get into a little bit of the psychology of the markets, which many people unfortunately do not pay much attention, right? Every time you look at a chart, you have to keep in mind that the market is like a big advertisement, okay? It's constantly trying to get buyers and sellers in, and this is something that makes lots of traders lose, right? Especially those who do not have a plan. Because as I said multiple times, guys, the market might be consolidating for a while, then it looks like it's breaking up, big bullish candle, right? People with no plan, they're just following their instinct, they're just following impulsive decisions. They see a big green candle moving up, they're gonna try and buy this, okay? And the market knows that. The market is essentially advertising, saying, hey, everybody, look at this, get in, we're going up, and it might do something like this. And now people have been stopped out, traders have been trapped long over here, and essentially there's volume over here that needs to be captured, okay? But for now, just understand that the market is a big advertisement machine, okay? Every time it's moving up and down, and you see that in your charts, you will see that for the most part, charts go up and down. It is constantly doing so because it's trying to grab orders from both sides, and it's gonna try initiate longs and shorts. So therefore the market is moving up and down, sometimes with lots of strength, other time maybe in a little bit of a step formation, right? You've probably seen that too, and things of that nature. Now you have to understand, and every time you sit in front of your chart, sit in front of your computer trying to trade, the market will undeniably create traps as it moves, right? To trap, obviously, traders in a given direction, hence the concept of trapped volume. And do not worry, we're gonna be getting into chart examples in a bit. But for now, bear with me here. I'm just trying to provide you with a little bit of the background within the trapped volume idea, okay? Every time you look at a market, think about the four participants, okay? Buyers, sellers, people looking to buy, people looking to sell. You want to see what they may be thinking, okay? You don't need to be 100% accurate. You just have to have a little bit of an idea in the back of your head as you follow your plan. And that's why it's very important to have a plan, right? So you don't get trapped into the many traps that the market will place in a given trading session. So let's look at a chart and let's go through the four groups over here. So I want you to focus on this information, okay? I've um, I've hidden some information over here to the right. We're gonna be revealing that in a second, but I want you to understand, and we're going to be discussing this in further. Trap volume usually happens at major swing points in the market, okay? And I've labeled some for you, right? You can see various swing points. So when we look at this information, right, if the market is over here, right, you have to go through the four groups. So people are already long, right? They're seeing this, right? They're seeing big bullish momentum moving up. They're going to be thinking, great, we're long, we're moving this way, right? Now, when we talk about people who are short, they're going to be thinking, holy Jesus, big bullish candles moving up. I might need to get out of my trade, right? And once again, just bear with me here. This is going to be very simple in a second. People who are looking to go long, right, they're going to be enticed to take more trades because once again, you can see the big bullish volume being shown over here with these candles. And people who are looking to go short, they're going to be thinking, there's no way I'm selling over here. Look at this momentum. We're going to run the highs. We're going to move all the way up, right? Especially we've broken above a major swing high. We're going to move up, right? That's what people who are looking to go short are probably thinking as this situation is presented, okay? Now, look at the trapped volume concept. Okay, we're going to be going through this. You can see a major swing low, major swing high, price trades below a swing low right over here. People get short, and I can guarantee you that, guys. Even a tick below the swing low right over here, people are going to go short. Why? Because it's a break in structure. That's what people learn. And you can see the momentum moving down, right? We're having bearish delivery, we're moving down. People see a break below a swing low. People believe that's just gonna continue forever. They go short, they get trapped over here, and the market moves in the opposite direction. And once again, same idea over here, okay? Major swing high, great bullish volume. People are going to be going long after we break above this. They're going to be saying, awesome, we've just broken above a swing high, time to run even further. And you get this, right? Trapped volume over here. They usually occur at major swing highs and swing lows, right? You can see a move below a key swing low, initiating shorts. People went short over here, right? And you get a sharp, quick reversal, right? Even though you had big bearish candles moving down. So look at this, same idea once again. We trade above a major swing high and we move up. And look over here, happens again, right? Trade below a major swing low. You can see, right? Sharp move down below the swing low, and up we go, right? People get trapped going short over here, and if they're holding this trade, they're absolutely in a massive drawdown, okay? And that's what you have to understand. The market is advertising, right? As the market is moving down below the swing low, it's probably doing that with a lot of force, with a lot of strength, and trying to get people short over here, okay? And people, once again, that have no plan, they're gonna have no problems in going short over here, okay? One thing is for sure, they're not gonna be thinking about going long, right? Why would they? It's big bearish candle after big bearish candle, break below, swing low, we're moving down over here, right? So keep those ideas in mind. Always try and think about the participants in a given market and think about this information as a big advertisement, right? The market is saying over here, right, as the market runs up, it's saying, hey, everybody, come on, get in long. We're moving up. Look at the strength that I'm using to move up. This is just going to continue. Right, and now I want you to think about this. As we trade above the swing high, what do you think is gonna happen over here? Do you think we're gonna be moving further up, advertising for more potential buyers and getting people that went long over here, right? Retail traders that went long as we traded above the swing high. Do you think they're gonna be enticed to take buys? Yes, they are, right? And is the market gonna move up or is it gonna move down? Well, I guess we're gonna find out. This is the full perspective, right? Happens again. We trade above a swing high, longs initiated right over here, and down we go, right? Down we go. Very, very simple concept to understand, very powerful, right? And we're going to be getting into the definition in a second, but I just wanted to show you the different examples, okay? This happens quite frequently. You can see it over here very precisely. Trade below the swing low, shorts initiated, volume trapped. We're taking them on a ride in the opposite direction, making them suffer this big drawdown, right? Because you have to understand that as the market is moving down over here, right, all you have until that point is just bearish candles, right? You're not seeing this. You're seeing a big and massive bearish candle trading through the low, and all of a sudden, very quickly, it's gonna start reversing, and you're gonna see this, and you're gonna wonder what the hell is happening over here, okay? And now you have your answer. The market was trying to advertise to get people shorts, right? Shorts initiated, long stopped as we traded below the swing low, because what do we know? People who are long, they're probably going to have their stop below major swing lows, swing highs, right? And that's good. It's by no means bad, but just an idea that you have to really understand every single time you're looking at a particular market, right? So with all that being said, what is trapped volume exactly, right? This is where we get into a little bit of the definition. After that, I'm going to be showing you a trade example using that idea that I took previously on GJ, and then we'll wrap this up. Okay, so let's just go through this rather quickly. Okay, when the market advertises in a given direction to entice traders in a direction just to push it in the opposite direction shortly. Okay, this is the bare bone definition of trap volume. Trap volume occurs when the market once again advertises in a given direction to entice traders in just to push in the opposite direction shortly, right? Most often, this will occur at major swing highs, swing lows in the market, as I've shown you in the example just a minute ago. Sharp move with great volume usually, right? And great volume is measured, right, with the candle size. As I showed you before, you're gonna see lots of strength going into a previous swing low, right? And once we trade below that and shorts are initiated and longs have been stopped, right over here, no retail trader in the world is gonna be looking at this as a buying opportunity, right? But this is what's gonna happen. We're gonna be moving up as we trade below the swing high, swing low, because once again, shorts have been initiated below the swing and buys or buyers, longs have been stopped below the swing, right? Very crucial idea to understand. And you're gonna see big volume candles, okay? You should not be afraid of that. Let's continue over here once again rather quickly. This concept can be found on every single time frame, right? You will see this happen on every single time frame. What you have to remember though is that the larger the time frame, the better for you, right? Higher probability, always. Because higher time frame blocks and swings and moves and candles contain more orders in them as they take longer to build. It's just very straightforward and very simple to understand. Therefore, you should always try and prioritize those swing highs and lows that are visible on the major higher time frame, right? I'd say, and this is just based on my experience, that anything above the 2 hour time frame is something I would consider relevant and strong enough. But that's just me and my trading, okay? If you find that 5 minute swing highs and lows work for you just fine, then that's great for you. But that's not me. That's what you have to understand. So we went through the definition. Right now it should be pretty easy for you to understand the idea of trapped volume. Now I know this may sound all confusing, so I have some more examples, right? Major swing low, trade below that, shorts initiated, long stopped, we go absolutely ape shit to the upside. We're gonna be going through this rather quickly, right? So more examples over here, swing low, trade below that, shorts initiated, right? Big bearish candle. No retail trader in the world is gonna be looking at this as a buy-in opportunity, okay? And what do you get? Sharp reversal in the opposite direction. Very straightforward. And you can see the same thing happen over here, right? Swing high, trade above, longs initiated, shorts trapped, short stopped, we go down. Very simple. Now, you ask yourself, how do I use it in my trading? And as I always say, guys, this is just a concept, idea, whatever you really want to call it. And the idea alone means absolutely nothing. You can just not try and trade this way. It's not going to be beneficial. You still have to partner this concept with everything else that you know, okay? Trading, once again, is like a puzzle. You have to be piecing yourself the different angles, trying to see what makes sense, what does not, and trying to make sure that you're comfortable with every decision that you're making as a trader. And you should double check always that that decision is coming from a plan following idea and logical decision, right? Should not be something impulsive, emotional, things of that nature. That's just gonna lead to loss after loss after loss, okay? You have to be partnering all that information with what you know about the market behavior. For that, let's look at a recent GJ sell that I took and shared with the private community, right? As I always say, link is in the description below. If you want to have access to a community of traders that are just trying to succeed like you, then you're going to be able to do that by following the link in the description below. You will also gain access to a community drive folder with over probably 20 to 30 hours of recorded material. Or also you'll gain access to a separate structured course content that's going to take you from not knowing how to read a market to absolutely being able to make decisions on a daily basis. This is the trade example, okay? And this is using the idea of trapped volume. Major swing high. I saw this information, right? After that, I didn't just enter short over here because we traded above a major swing high, because there's a probability that price is just going to continue running further up. So what I did is I go into the lower time frame and I confirmed that idea to go down, okay? And we're going to be looking at that. Just some proof over here for those of you who are a little bit hesitant. 9th of June 2022, tapped into the sell area. Oh, that's from a different trade. I am in a GJ sell, giving it a second attempt for the week because I had been previously stopped trying to go short, I believe, somewhere in this region. The idea, once again, is using trapped volume. And this is essentially a little bit of the setup, okay? So this is where we trade above the major swing high, we initiate longs, we stop shorts, we switch direction, we break internal structure, we retrace up into the origin, and this was my expectation, right? And you can see that. This is the live market. You can see the timer. This is not a screenshot back testing. This was what I shared with everybody in the community of what I thought was likely to happen in that particular scenario. And if you look at the time, you go through your GJ chart on June 9th, 2022 at 4 p.m. UTC +1. This is exactly what you will see, okay? And yeah, it was a pretty successful trade. As you can see, it ended up dropping quite nicely from there, 250 pips. It ended up dropping even further, right? This ended up being a over 700 pip move. However, was I able to predict that? No, I cannot expect that GJ is all of a sudden gonna drop 700 pips in 4 days, right? I mean, I can understand it dropping that much, but I would have not been able to predict it, right? Especially in such a short period of time. So you don't have to be harsh on yourself. I took what the market gave me, which for me was 250 pips, so that was more than enough, right? Let's just, to summarize this all up, go through the trade idea once again. This is the swing high. We reach above it. Once again, we initiate longs. We stop people that were short. Great. After that, we switch internal structure. We retrace back to the origin and we sell off pretty hard. Very simple trade. Very straightforward. Amazing. Now guys, that is it. I really do hope you guys enjoyed it. I did try my best to get the ideas across, and now we're going to be summarizing the main takeaways of this video. Once again, understand that the market is a big advertisement machine. Every time you look at a chart and it is going up and down, no real rhyme or reason, you have to be thinking, what is it trying to do? Are we trading above swing highs, trying to advertise for people to get in long and stopping potential shorts, so that we can go in the opposite direction? Or are we really moving in that direction because we've stopped previously people over here, right? You have to be thinking about the 4 different groups once again, and I'm not going to repeat them because you should already know them by now. Always think about the different participants. Trap volume is a powerful tool, but needs to be partnered with your overall market understanding. I've just shown you an example of that with the GJ trade. Trapped volume occurs pretty much everywhere, so pick your ideas wisely, and to filter most of them, once again, focus on the 2 hour and above. Okay, 2 hour and above, those swings are gonna be strong enough for you to try and take advantage of. So I don't want to make this video too long. I hope you guys did enjoy the presentation. Once again, I tried my very best to provide you with the information. I think this was good, and take it as it is. Once again, if you didn't like it, that's fine with me. Not gonna be offended. So yeah, take it as it is. Take what you think is good for you. You do not necessarily have to agree with everything that I've said. And that's just the beauty of trading, right? You have to be making it your own. So guys, take care everybody. Thank you for listening, and I will see you very soon. Take care everybody.